Understand what's going on with the sector. We have with us Nithya Balasubramanian joining in right now from Sanford Bernstein to talk about the ongoings in the sector and what it could look like down the line. Nithya, great to have you today on ET Now once again. Thanks so much for taking the time out. Nithya, let's first address the so-called elephant in the room, and that's always been US markets, right? Has pricing erosion further eased? What is the situation when it comes to the drug and the injectable shortage? I mean, is there more to the ray of light for trade generics?
See, in the US, we do see pricing deflation has softened, especially compared to last year. We think pricing deflation was trending at minus 15, minus 20%, even depending on the portfolio. And we think that's down to low single digits this year. And I think that has now been consistent commentary from most of the players, most of the Indian generic companies, as well as some of the global MNCs as well. If you look at what Teva's been saying, what Viatris has been saying, I think all of them are consistently calling out that the pricing environment is softer this year. And on top of that, as you were talking about, we are seeing some supply disruptions in the market. We have seen some players recall some products. We have seen some players file bankruptcies. So these will therefore create opportunities for players with a wide portfolio. So Dr. Reddy's or Aurobindo, these are companies that have a pretty wide portfolio in the US. So it's more likely that these companies can benefit when these one-time disruptions happen, provided they have flex capacities, right? So I think that is still true. We would expect that to last at least for the next couple of quarters. Beyond that, we'll have to wait and watch. I think the competitive intensity hasn't really changed. If you look at any new product that's seeing generic competition, you're still finding 10 to 12 players, right? And which means your prices will erode down to 90-95% levels. So that we haven't seen a change in yet. But definitely this year, pricing deflation is softer.
But will it stay at the current levels, or as cyclicality and global volatility kicks in, new launches around the corner, price erosion will start again?
See, I think, as I said before, what is required for companies to do, let's say, double-digit growth is not just what is the erosion in the base. You also need to think about what new products they have to launch. Even if you assume that price erosion will remain at the softer levels that we're seeing now, maybe 5%, 6% on the base, you still need several new launches that you need to launch in the US market to be able to cover up for that base erosion and grow on top of that. So I do believe price erosion can remain at these levels. But I'm not so sure people have the ability to grow double digit even if price erosion is soft. Especially if you do not have complex generics or biosimilars in the pipeline.
For next 12 months, if you have to look at the big picture view of the Indian generic companies and their product pipeline, is it looking exciting? Is it looking dull?
I wouldn't say it's exciting across the board. I think it's exciting for some companies. If I look at the next 12 months, we do believe that Cipla can launch a couple of interesting assets, generic Advair or generic Abraxane, for example. They are now transferring it to alternate facilities. Hopefully, they'll come through in the next 12-month time frame. Lupin, for example, already has a Spiriva in the market, and their market share gains have been pretty good. So I wouldn't say that it's a secular trend across the industry, but depending on your product portfolio, depending on the competitive landscape of your launches, there are some names I think that will do better than the others. Cipla and Lupin, for example.
Enjoy reading your report. Cipla, Blackstone versus Torrent Pharma, Showtime, let's do it. So let's talk about Cipla. I'm going to construct a scenario here. There is a deal with a Torrent. What happens then? There's a deal with a private equity player. What happens then? And there is no deal. So in these three scenarios, unless there's another fourth scenario, which you can flag off for us, if these three scenarios are at play, what happens to the shareholders of Cipla?
See, I think last couple of days is when again news had broken that Blackstone is probably not going ahead with the deal. Again, I'm basing it on the press releases that I'm seeing. I don't have any incremental information there. So it seems like Torrent is the one serious suitor who does remain in the fray. I think the challenge for somebody like any private equity was always how do you unlock the 20-25% IRR that you normally look for when you're investing in an asset like this. Cipla is a relatively well-run company, so we didn't really see any immediate quick wins that they could go after to unlock value. That's probably why Blackstone is maybe backtracking. Torrent, I think the strategic rationale is clear. I think we actually did this analysis of looking at their India portfolios together. And while there is overlap in terms of molecules, what we found was that it's largely manageable in the sense that even in the overlapping molecules, one of them have like significantly high market shares. So then, therefore, it might be easy to either sell the smaller brand or retire the smaller brand. So we think the overlap is manageable. It'll obviously create, you put the two together, it creates the largest domestic pharma company. And of course, the combined might of the PNL could make them a bit more bolder in terms of other capital allocation choices. But in that report that you mentioned, we had called out that it won't be an easy task for Torrent to find the monies that would be required to close this deal. In this specific case, the promoters of Cipla obviously want all cash. Not an easy one for Torrent, which is a smaller company. We have now in the press, we have now heard of a mix of Apollo, JP Morgan, CVC, Bain Capital, all of them seem to be involved in some capacities. So maybe they're successful, but it's going to be a tough one in terms of how they raise the monies. If the Blackstone deal or the Torrent deal is going forward, I would imagine it's a positive for the Cipla stock. But if either suitor and both the suitors actually fall out of the race, I would imagine the stock will actually react negatively.
But why are there so many deals which are at play? The Glenmark Nirma deal was announced yesterday. Cipla is in the works. I mean, typically when there are deals or M&A happening with private equity investors interested in it, it just tells you that the sector per se is either going through consolidation or there is a major revamp which is around the corner.
I'm not sure I can draw any lines between what's happening with Glenmark and Cipla. Cipla is in a very, very different part of its maturity, if you will. They're now in a place where their third generation is likely not interested in taking on an operational role. And that's probably why the Hamids are keen on selling their stake now. I'm not sure Glenmark is, the Glenmark deal that happened is a similar one, right? You still have the Glenmark promoter involved in the parent company. This seems to be more towards generating cash and unlocking value for the API business. I don't think I can draw any parallels here.
Let's say 2-3 years out, if you have to talk about two situations. One, where are you confident of growth and earnings, but stock is expensive? B, where you're getting a combination of moderate growth and a high margin of safety. Where do you think these two factors are at play in this universe you track?
We think from a 12-15 month perspective, we still like Sun and Cipla, but I think given all the flows that the sector have seen, they are relatively more expensive, and therefore I'm not sure they're presenting an entry point right now. But when we look at the fundamentals, we continue to like Sun for their specialty exposure. We think there is more operating leverage yet to play out. In particular, we're looking forward to the approval of the Duroxolotine asset in the US, and that's going to take another year or so. And in the meanwhile, we'll also find out more about market acceptance of alopecia areata drugs. So that's what we're looking forward to with respect to Sun. Cipla, again, we think they have multiple shots on goal in terms of complex generic assets, respiratory generics or peptide injectable assets in the pipeline. They haven't disclosed many of these assets. So the closer they get to approval, earnings upgrades are likely to happen for that stock. But of course, I think in the near term, it's going to react based on what's happening with this stake sale. So these are two names that we like. From a long-term perspective, we think growth will remain consistent and strong. However, possibly not an entry point right now. Biocon is the other name that we like, where we think valuations are attractive. And we believe earnings acceleration will happen in FY24, FY25. We fundamentally believe that the biosimilars market in the US is more attractive than it was in the past.
Yeah, great to have you on the show. Thank you so much for taking the time out. And, it's always great hearing your thoughts on the pharma sector.
Thank you for having me.